Thank you very much for joining our 45-minute webinar, where you will learn how to help your organization improve your CDP and climate change performance, specifically with estimating your Scope 3 greenhouse gas emissions. My name is Michelle Karchman, and I will be your moderator. Joining us today are Tiffany Day from FirstCarbon Solutions, Mark Chadwick from Carbon Clear, and Sangwon Suh and Dan Girdler from VitalMetrics. In this webinar, Tiffany Day will provide a high-level background on CDP scoring so you have a better understanding, and you will also learn the high-level steps to achieving 100A. And in fact, 29 companies received 100A from CDP this last disclosure cycle. After FirstCarbon Solutions provides a summary of Scope 1, Scope 2, and Scope 3 emissions, Mark Chadwick from Carbon Clear will review the importance of Scope 3 and how these indirect emission sources impact your overall and CDP performance. Sangwon Suh and Dan Girdler from VitalMetrics will then talk about the challenge of estimating your Scope 3 emissions and how to use the VitalMetrics CDP system to streamline the process. We will be opening up the webinar for questions at the end. So if you do have questions, you'll see an area in your control panel to type in your question throughout the webinar, and we'll answer your questions after the panelists have gone through their presentations. If we run out of time and are unable to get to your question, please be assured that we will get back to you offline to make sure you have the information you need. Also, you will receive a link to the recording of this webinar, and we'll send that in an email in the next few days. Finally, you'll also receive a survey requesting your feedback on what you thought of today's webinar. With that, and without further ado, let's start our journey on the road to 100A with Miss Tiffany Day.
Great. Thank you so much for the introduction, Michelle, and welcome everyone. First, let me start out by introducing our global partnership between FirstCarbon Solutions, Carbon Clear, and VitalMetrics, which together has served more than 100 of the Fortune 500 companies in environmental sustainability to form a seamless network of services and solutions to support your strategies and tactics year over year. So welcome FirstCarbon, Carbon Clear, and VitalMetrics. Now, as we consider the CDP reporting season, we reflect on why do we go through this process? Well, over 5,000 companies in over 80 countries choose to participate each year in CDP. Why? Because this demonstrates to investors, to supply chains, and governments that you're managing risks and capitalizing on your opportunities for your business. In addition to reducing the impact operations has on your resources, companies have identified operational efficiencies through the process and saved over $53 trillion to date, all of which attracts investors, customers, and strengthens your brand in the marketplace. The process of disclosure and transparency also encourages best practices across many industries to help elevate quote-unquote standard business practices to be more sustainable. So as we approach the 2015 CDP questionnaire, I wanted to briefly go over the structure of the submission. It contains 3 core modules. The first module is governance and strategy. This covers your business strategies, management and employee incentives, as well as management structure. The second module is risks and opportunities. This outlines your understanding, mitigation, and adaptation of various risks to your business and what your plans are to leverage opportunities. And finally, the third module is emissions management. And this describes the methodology, boundaries, carbon reduction targets, and specific reduction initiatives you've taken over the past year. And underlying the entire submission, verification reviews both climate data that you provide, the systems, models, and controls in place for collecting and managing it. So when we look at what your score is. How does CDP score you? What is the breakdown? So the score is both a numeric number, 0 to 100, followed by your performance band, which is a letter grade, A through E. Your performance band is assigned once you've passed the 50% threshold for disclosure. So examples of scores below, the ideal being a perfect score of 100A. So moving on, how do we get 100A on CDP anyway? Well, the first step, the most crucial one, is to plan ahead. I can't underemphasize the importance of having a multi-year strategy that outlines your sustainability strategy, which would include both short and long-term plans to reduce energy, along with specific steps that you will take to achieve your goal. Given that your strategy may require approval at the highest levels to set achievable targets that are integrated into business operations, it's best to start outlining requirements and data gaps well in advance. Secondly, being able to articulate where your operations face climate-related risks, along with a thorough description of management methods, will help you score points. Being aware of regulations, taxes, or price volatility of energy and identifying ways to address the risk to your business are all key to performing well. Finally, you'll need to implement systems and processes to gather and collect GHG emissions. It can be a challenge collecting all of this data for an annual report, so many companies rely on software or work with third parties to help them collect and calculate emissions. Addressing these three areas will certainly put you well on the road to achieving 100A, if not attaining CPLI, the Climate Performance Leadership Index. One of the things that all these companies that have achieved CPLI and 100A share is that they've all tackled Scope 3 emissions, which are some of the hardest to quantify since they're outside of your immediate control. So when I talk about Scope 1, 2, and 3 emissions, what does that mean exactly? So let's first start by talking about Scope 1 emissions. These are direct emissions from sources that are owned or controlled by your company and include emissions from fossil fuels burned on site, vehicles you own or lease. And next is Scope 2. Scope 2 is indirect. These emissions result from the generation of electricity, heating and cooling, or steam generated off-site but still purchased by your company. And finally, Scope 3 is also indirect, and these include emissions from sources not owned or directly controlled by your company, but still related to your business activities. So examples of Scope 3 are things like employee travel, commuting, solid waste disposal, wastewater treatment, even transmission and distribution losses associated with the electricity that you buy. So here to go into a little bit more detail about Scope 3 is Mark Chadwick joining us from Carbon Clear. Welcome, Mark Chadwick.
Thanks, Tiffany. For the remainder of this webinar, we're going to focus in on Scope 3 emissions. We've chosen to do this because most leading organizations, we believe, have substantially mastered the Scope 1 and 2 elements of the CDP questionnaire. And if your organization is targeting a 100A score, well, to do that, you must do well also with Scope 3. So looking at the importance of Scope 3 emissions for organizations. When we model Scope 3 emissions for businesses, we can see that they are typically far greater than the Scope 1 and 2 emissions of an organization combined. So clearly there's a lot of opportunity to reduce lying in Scope 3. We can see organizations beginning to take Scope 3 more seriously, not just the measurement of it, but also the management of it. At Carbon Clear, we do research every year into the performance of our 100 largest listed companies. And what we found in our most recent survey is that now 83% of those largest companies are requesting energy and or carbon data from their supply chain. So really trying to understand Scope 3 in detail. And this is increasing year on year. We can also see increasing importance placed on CDP, so placed on Scope 3 by CDP questionnaires. So this is a growing trend. The questions become deeper, and I think this reflects the view that leading organizations need to move beyond Scope 1 and 2 to really tackle Scope 3 in order to improve their climate change response. Recent research by Verdantix has also indicated that 53% of sustainability executives are planning to report Scope 3 for their whole value chain in 2015. And that's an increase from last year of 50%. So we're not talking about a small movement here, we're talking about a pretty widespread. In fact, the majority of businesses are now taking Scope 3 reporting very seriously. So let's have a look at what's driving that for businesses. The business case for reporting Scope 1 and 2 emissions is, I think, for all of us on this webinar, pretty clear and well understood. By reducing our Scope 1 and 2 emissions, we can cut cost, we improve our reputation, we reduce risk around our reputation, we improve our governance, we meet customer and investor expectations. So I think that's very well understood. But what about Scope 3? I mean, as Tiffany mentioned, this is an indirect source of emission. So the business case is a little bit more difficult to prove directly. And I think what we see as we work with businesses is the exact business drivers are going to vary depending on your upstream, downstream emissions balance. Now, at the risk of getting too technical too quickly, what we're really looking at here is an upstream heavy business will be one where the majority of their emissions are associated with things that they buy. And a downstream heavy business will be one that is, has a lot of emissions locked up in the customer use of their products, for example. So if we take an example of a business that is very upstream heavy, what we're essentially saying is there's an awful lot of energy and carbon embedded in their upstream supply chain. And that energy has cost the suppliers that they work with quite a lot of money. So just as there's an opportunity for the organization to reduce emissions directly through Scope 1 and 2 and save money, so there is an opportunity for their suppliers to reduce their emissions and pass those cost savings on to the customer. And perhaps these cost savings are significant and even more significant than direct reductions. If we think about a downstream heavy business, here we have an organization that sells products to customers that consume energy and produce emissions in another way. Here, companies have a real opportunity to deliver market-leading products to their customers that help the customer be more efficient and save money. And that's a real opportunity to grow market share. So with that said, let's take a look at the questions in the CDP questionnaire. So I can just provide a little bit of background as to what you're expected to say in the answers. So question 14.1 relates to the calculation of your greenhouse gas emission Scope 3. And this needs to be done in accordance with GHG Protocol Value Chain Standard. This is a relatively new standard, and it breaks down your Scope 3 emissions into easily understood categories. It really does help organizations to quantify emissions correctly and transparently. In this particular question, there are disclosure points allocated for each category of emissions that you can disclose. The more full your disclosure, the more points you'll get. This is worth a significant amount of points, and so therefore needs to be taken quite seriously. The next point, of course, 14.2, relates to verification. So in order to score well here, you must have external verification for at least one of your Scope 3 categories. To score the maximum points here, you need to have that verification done to an accepted CDP standard. And it's important that when you do this, your verification statement clearly identifies the emissions that have been verified with the correct year, and make sure that that statement is published in a place that can be seen and attached to the ORS. Question 14.3 relates to performance. This essentially means what's happening to your emissions year on year. In order to do well here and to get the performance points which will lead you to the A score, you must be reducing emissions in Scope 3, and the reason for that reduction should relate to emission-reducing activities that you have undertaken as a business. So simply having your Scope 3 emissions reduced because perhaps your business is smaller or you've divested a business unit is not adequate. One other important point to think about here is scaling is applied to this question. So what this means is, let's say on average, the leading companies in the CDP disclosure have reduced their Scope 3 emissions by 10% year on year, and you've reduced your emissions by 5%, you would not get the full allocation of points. So there is almost a threshold that needs to be achieved in order to get the maximum performance score. The final question relates to engagement. And this is relates to engagement specifically with your value chain. You must specify with whom you engage, how you prioritize engagement, and what's the scale of engagement. So how many of your suppliers are you engaging with? What proportion of your supply base do they represent? And a relatively new area for us is also to look at how do you use the data. We think that this question is important because very often customers ask their suppliers to disclose information and don't make it clear what they're doing with that information. And that does lead to a little bit of concern among the suppliers who are responding. They want to understand that if they're taking the time to give you the information, that you're going to use it for the right purposes. So we move on to my final slide. I just want to quickly touch on the scoring associated with the Scope 3 question. You can see that from the slide that there are a significant number of disclosure points available for the Scope 3 question. Roughly 10%, depending on your question route, are attributed to Scope 3. So you can clearly see that it is not possible to hit 100 in your CDP disclosure unless you score very well here. 6 points are available for performance, which is roughly 8% of the score. So again, without a very strong Scope 3 performance, it will not be possible for you to hit an A. What I think is quite interesting when we look at the distribution of the points is maybe it gives us some clue as to how CDP looks at Scope 3. From a disclosure perspective, they're fairly evenly weighted among the calculation, the engagement, and the reduction year on year. So here we have to make sure we're disclosing transparently in all areas. When we look at the performance score, you can see that by far the most significant contributor to the score is your emission reduction year on year. So I think CDP is signaling clearly to us that this is the most important area that leading businesses need to focus on, reduction of Scope 3 emissions. The next most significant area by far is the verification. So if you're reducing your emissions, the investor community represented by CDP would like to know from an external party that that information is correct. So thank you very much for your attention. I'm now going to hand you over to Dan Girdler from VitalMetrics. So he's going to discuss some of the challenges associated with Scope 3 emission calculation. Dan.
Thank you very much, Mark. So this slide we're looking at here serves to illustrate what has already been touched on, i.e. Scope 3 emissions can be relatively huge, certainly a very large part of an organization's overall footprint. However, despite the importance of Scope 3 emissions, they can be very difficult to get a handle on. Now, as these blindfolded characters here illustrate, even when one does begin to address a part of it, it's hard to really understand the materiality or the significance of what it is you're attempting to measure without understanding the whole. Now, added to this is the challenge, certainly traditionally at least, of the task of data collection and consistent calculations over such a large area of suppliers, materials, and data points, often across internationally scoped supply chains. So it's not surprising that cost, time, and even then partial results have been prohibitive factors to organizations really engaging with their Scope 3 impact. Further, as has already been touched on, the GHG protocol and CDP divide Scope 3 into 15 categories, as shown here, from purchased goods and services to business travel and emissions associated with the waste generated in operations. All of these together represent the Scope 3 big picture. Now, the solution we're going to look at today, VitalMetrics CDP, deals with all of these issues and enables complete and readily achievable CDP-ready GHG emissions calculations for all 15 Scope 3 categories. The service also facilitates very efficient third-party verification of those Scope 3 calculations. It captures your organization's engagement activities with your suppliers, and it enables calculation, where necessary, and comparison of previous year's emissions with current emissions. So in short, VitalMetrics CDP provides a one-stop Scope 3 GHG emissions measurement and CDP disclosure service. So let's take a brief look at how VitalMetrics CDP does this, the method and the data that enables rapid and complete Scope 3 measurement. VitalMetrics CDP can calculate the majority of the Scope 3 categories via spend data alone, information which is often readily available to an organization from its general ledger. Now, this approach, commonly known as spend analysis, requires only information about how much your organization is spending on what, in order to deliver to client comprehensive GHG emissions estimations. Indeed, the US federal government agency, the GSA, recently used this approach with VitalMetrics data to analyze the environmental impacts of its own supply chain. The remaining categories are dealt with via physical data, mass and distance and the like. And indeed, physical data can also be used in the tool to optionally further refine areas of spend analysis as well. And so the key here is that the majority of Scope 3 categories can be dealt with using readily available economic data within the VitalMetrics CDP solution. Now, the calculations within the tool are underpinned by various data sources, and credibility is, of course, a key component to such a deliverable. The spend analysis component is dealt with primarily by the CEDA datasets, a suite of rigorously peer-reviewed economic input-output datasets for spend analysis. And as already mentioned, the data of choice for the likes of the GSA, Google, and numerous organizations of various sizes around the world. This core data is further consolidated with various other regionally and sector-specific factors to ensure best-in-class results. In short, much of the heavy lifting is done via this compiled data, meaning that the data requirements from a user's perspective are relatively very straightforward, and the results are robust. Where physical data is used, the calculations are underpinned by numerous and again regionally specific process data factors, again to provide reliable and credible results. So in summary, VitalMetrics CDP represents a service that is designed to be efficient and certainly affordable, that covers all Scope 3 GHG emissions calculations and CDP disclosure needs, including calculation for all 15 of the Scope 3 categories, a very efficient third-party verification solution, previous year emission measurement and comparison, and it serves as a repository for supply chain engagement activity. The methods and the data within the tool ensure protocol-compliant output, and the analysis is characterized as both rapid and credible, with the majority of emissions categories being dealt with using an organization's readily available spend data and enabling further refinement by using additional physical data. So with that, let's dive into the VitalMetrics CDP tool itself to get a feel for what all of this looks like in practice. And at this point, I'd like to hand over to Sangwon Soo, President of VitalMetrics.
Thank you, Dan. For the next 10 to 15 minutes, I will log on as a user and navigate through the VitalMetrics CDP from a user experience point of view. So let me first log in. You too will be able to log in, enter data, and navigate through the VitalMetrics CDP tool as a demo user. Please contact either FirstCarbon Solutions or Carbon Clear for a free demo account. Here is the dashboard. I created a fictitious company, Acme Candy Inc., for this demo. So you can edit the profile. One thing that is very important here is that we assign a relevant industry classification code for your organization that defines your organization's sectoral identity. Based on your organization's sectoral identity, VitalMetrics CDP automatically identifies typical priority emission source categories and emission factors for you. In this particular example, Acme Candy Inc. belongs to the sector, here we go, non-chocolate confectionery manufacturing. We also use your organization's annual revenue to automatically calculate the typical volumes of purchases for the sector. You can add up to 5 users of your organization who can use this tool. So let me go back to the dashboard. So dashboard shows an overview of 14.1, 2, 3, and 4. Under 14.1, you will see the Scope 3 emission sources, all 15 categories of them, and their evaluation status, greenhouse gas emissions in metric ton CO2 equivalency, and methodology used to calculate that, and primary data, if it is used, and any explanation if you have chosen not relevant. And these are automatically populated based on the choices that you make while you are using the tool. 14.2, verification and assurance, you will see the type of verification, verification statement, reference, what kind of standard was used, and percent verified under each of this verification. 14.3 previous year Scope 3, it is almost identical to 14.1, except that it provides the percent change as compared to the previous year. So basically 19.24% of decrease of greenhouse gas emissions in this particular category as compared to the previous year. 14.4 also shows you all the CDP reporting requirements. Now, let's dive into 14.1. So I will click through a few categories and show you how this may work for you. And first, let's look at the purchase goods and services. In most cases, this category contributes the majority of organizations' Scope 3 emissions and is also the most time-consuming category of all. It asks a few questions to determine whether the category is relevant for your organization. And as you know, different disclosure points will be assigned depending on whether the category is relevant or not relevant and whether it is calculated or not calculated. And corresponding explanations will be dynamically chosen to meet the CDP disclosure requirements. So for example, if you say no to the question, has your organization purchased any goods or services during the reporting year, then you have to provide explanation why there was no purchases, goods and services. You can also enter any already calculated data for any of the 15 different categories. You can simply enter the values and integrate them into the VitalMetrics CDP. And any primary data from your suppliers can also be entered and integrated. Now, here is the question number 5, where you can actually enter your organization's spend data for purchased goods and services. You can enter the spend data in 2 different ways. First, down below here, there is a list of typical priority category section. VitalMetrics CDP shows the typical top contributors of greenhouse gas emissions and corresponding typical spend ranges based on your organization's sectoral identity and revenue values. It does so in such a way that they cover at least 95% of the greenhouse gas emissions of the average company of the sector. This is what is called the materiality threshold. It is notable that, however, CDP disclosure points are not dependent upon the materiality as of yet. So 10% or 95% of materiality doesn't make much difference in terms of the CDP disclosure point. But as you know, CDP has been making things tougher over time, requiring leadership, so it may change over time. And also, if you wish to verify and assure the result, the verifiers will certainly look into the materiality questions. Well, in the typical priority list, you will see the usual suspect for candy company, the organic chemicals, corn syrup, sugar, processed food, etc. are ranked top in the list. You can simply enter the corresponding spend value here. VitalMetrics CDP has integrated a number of algorithms to detect unusual data entries and to ensure materiality. For example, if you accidentally enter the wrong number, like for example 5 million instead of 500,000, let's see what happens. I click save, and it shows that validation failed. And now if you look at the validation report, it says that it detected a high emission. But every company is different, and your company may be different from the average company. In that case, you can just confirm and accept to override those warnings. I will just put back 500,000 for the time being and proceed. Second, you can also manually enter any number of key spend categories by yourself. Remember that the typical priority categories down below are based on sectoral average data. But each organization is different, so it may miss some of the important spend categories of your organization. So those can be manually entered here. For example, suppose that I know that my company spends $600,000 on laminated paper for candy wrappers. I will search the keyword like laminated. It seems to belong to manufacturing sector. And there are two different products that uses laminated. I will use paper product. And here we go. So coated and laminated paper, packaging paper, etc. I will put $600,000. And the percentage of your data entry as compared to the annual revenue is automatically calculated there. Let's look into some other categories. Capital goods, it is calculated in a very similar way. Very similar. And let's say fuel and energy related activities. So this category is about fuel cycle emissions and transmission and distribution losses, not the usual combustion emissions. So in this case, you can choose different units depending on the fuel energy categories, either kilowatt hour or dollar or liter, kilogram, US gallon, megajoule, and cubic meter, etc. Up and downstream transportation. Well, it can be automatically calculated based on your sectoral identity and the revenue value. But if you wish to further refine the result by yourself, you can enter the physical unit data like the transportation distance and volume of transportation, and it will automatically calculate the result for you. So I won't be able to go through all these sectors today. But you know, if you are interested, our partners will be happy to assist you and provide demo user accounts that will allow you to explore the tool further. So in short, VitalMetrics CDP is a one-stop shop for all your Scope 3 disclosure needs. And it does not only deliver complete Scope 3 greenhouse gas emission estimates, but also deliver all CDP required questionnaire and criteria for complete Scope 3 disclosure. So with that, well, thank you very much for your attention. I will hand it over to Michelle.
Well, thank you, Sang-Won. That was fabulous. I appreciate you quickly going through a system to give people a taste of what is possible. We do have a few questions that have already come through, so let me start by asking those. The first question is for Dan and Sang-Won. Am I understanding correctly that VitalMetrics allows us to calculate Scope 3 emissions without collecting information from our suppliers?
Great question. So yes, Dan speaking here. That's absolutely right. So the principles of a work of spend analysis, such as we've looked at here, or indeed physical data collection, all those data points are originating from the organization in question. Not that we're not sending out multiple surveys and questions or even requests to lots of suppliers to log in and put data in. All of these data points required and needed are held by the disclosing reporting company. So yes, that's absolutely what we are saying.
Great, great. And again, we have a few questions coming in, so so feel free to ask via the question box. The next question again is, I assume that NAICS has a drop-down menu of choices.
Yes, again, that's exactly correct. And those choices can be searched via text input to assist with finding the right category for your sector, for your company. And indeed, of course, there's support on hand should it be needed from any of the three companies in this partnership listed here.
Fabulous. Fabulous, fabulous. Next question is, I'm going to throw this one over to Mark Chadwick from Carbon Clear. Do we have to report emissions information to CDP for a specific period or any 12-month period, and we can choose?
As long as the Scope 3 emissions period you're reporting aligns with the period that you've chosen for your main questionnaire, I think that's great. Generally speaking, what we would expect to see from organizations is that they would be reporting their most current year. But we have seen in the past organizations reporting perhaps 1 year out of cycle. It doesn't affect the CDP scoring in any way that we can see. But clearly we would like to see the most current information if possible.
Excellent. The next question we have is, I'm going to throw this one over to Tiffany. Tiffany, can you really help customers achieve 100A? How do you do that? I guess a little skepticism.
Yes, absolutely. We've helped customers that started with a score as low as 17, and within a year they were already in the CPLI. We have customers that are already scoring 99A and want to close that gap to get 100A. So we run the whole gamut. So and as I mentioned in my presentation earlier, it is a multi-year plan, and so we can work with customers to form a strategy and outline tactics to achieve 100A, and outline that strategy for you. So good question. Thank you, Michelle.
You're welcome. You're welcome. Another question came in. There are a lot of questions coming in, so I'm going to try and get to all of them. And as mentioned, if we do not get to your specific question, we will get back to you offline for sure about that. The question very specifically is, if we are reporting 6 out of the 15 categories in Scope 3, can we reach 100 CDLI? So it's not CPLI, CDLI. So Mark or Tiffany, either one of you want to take that?
I'll comment briefly on that. I think it depends because disclosure leadership indexes are typically allocated by geography. So if you were reporting 6 out of 15, that means you would have lost somewhere around 4 points. So assuming everything else was great, you could get 95, 96, and that would be good enough in some countries to give you a CDLI position, but not in all countries.
Okay. Thank you, Mark.
Tiffany, any further comments?
No, I think you summarized it well.
Oh, okay. Another question for either Mark or Tiffany. If you start reporting Scope 3 in 2014, and you have been reporting Scopes 1 and 2 for many years, do you have to continue with 2 base years?
Well, so one of the questions, I'll start, and then Mark, you can maybe jump in and round out. Sure. So yes, you look at Scope 1 and 2, and it sounds like you've added Scope 3, and there is a question to compare year over year. So maybe I'm not totally understanding the question, but so you'll continue to report Scopes 1 and 2 in your 2015, and then also add Scope 3, and then one of the questions will look at your previous year Scope 3. So we can do a delta with that. And the VitalMetrics CDP software solution also enables year-over-year reporting, even if you didn't report Scope 3 the year before.
Yeah, and just to further that, I wonder if the question relates to the earlier question in the CDP questionnaire where you're asked to report your base year emissions. You're still only expected to report your Scope 1 and 2 base year emissions in that question. So there isn't a requirement to align your Scope 3 baseline with your Scope 1 and 2 baseline. I think that's very tricky to do, and I think CDP recognizes that people haven't been measuring Scope 3 anywhere near as long as they've been measuring Scope 1 and 2. So, as Tiffany said, the only place where you'll be expected to deliver a comparison will be a year-on-year comparison in the question 14 section, and you have an option to say that it's your first year of measurement if you're not able to compare.
Fabulous. Again, feel free to ask questions. It seems like people are very comfortable with the tool and throwing questions our way. I'm going to throw this question first to Tiffany, and then Mark, if you have anything to add, feel free to do so. Does this tool, the VitalMetrics CDP tool, also assist with other CDP reporting? Can it be used for the entire climate change questionnaire?
Is the entire climate change questionnaire
Can VitalMetrics CDP be used for the entire climate change questionnaire?
No, this particular solution is focused around Scope 3. This is VitalMetrics CDP, but both FirstCarbon Solutions and Carbon Clear can assist with the rest of the questionnaire. CDP also has services, the reporter services, to assist companies with their questionnaire, as well as membership with different panels and industry-focused discussions. Does that answer the question, Michelle?
Yeah, Mark, what do you have to add on that?
I think that's right. Well, I think it's just important to think about the emphasis here for VitalMetrics CDP. It is a Scope 3 focused tool and solves a really difficult problem for responding companies. Calculating your footprint in accordance with the GHG protocol value chain can absolutely be done without VitalMetrics, but it is a difficult, complicated process requiring quite a lot of complex modeling typically to arrive at an answer. So at Carbon Clear, we use the VitalMetrics information to help us solve the really challenging questions like how do I know what the entire upstream emissions of the things that I buy from third parties actually look like. And that's really difficult to do without a tool like that.
Mm-hmm.
Sangwon, do you have anything to add to it?
Right. I think that many of the audience is currently wondering, aren't we too late for Scope 3 CDP disclosure, given the challenges that Mark just talked about? I think my answer to that is that first, start with the spend categories for which data are readily available and continue to build on it. Even if it is a few data points per each category, it will certainly be a step toward 100A. And second, VitalMetrics CDP provides a general ledger mapping service with very quick turnaround time. It is not too late to start now. So you can send us the general ledger data in a spreadsheet and we can populate the tool for your organization. So I just wanted to make sure that it is not too late to start for Scope 3 CDP disclosure.
Great point, Sangwon. Thank you for reminding everybody on that. We have had some more questions coming in. Unfortunately, we are at the close of our time for this webinar, but please rest assured a few things that every question will be answered. You will receive an email or a telephone call from one of our panelists or someone from either FirstCarbon Solutions, Carbon Clear, or VitalMetrics to answer your question. So rest assured of that. Also understand that you will receive a recording to this webinar if you'd like to pass it along to colleagues or re-listen to it. So as we close, I want to thank our panelists and everyone who attended. We do hope you found today's session valuable. Of course, if you are looking for help maximizing your 2015 CDP performance, including Scope 3 emissions, and it's not too late, please contact us for more information. We'd be happy to help, or we will drop you an email or give you a call to see if there's anything we can do to help you. Thank you so much for your time and have a good